One common question that I get asked a lot is, how should I turn on my income? And does it matter if I'm working with Kaiser on the union side or if I'm working with the physician or the salaried employee side? Because there's really two parts to, which category you fall into. But each of them have similarities. So for example, you get a chance to turn on the lump sum, or you can turn on income for life. You can also have period certain, or you can have survivorship. So let's go ahead and cover all of these. So the lump sum is straightforward. It means you roll it over. This is not a taxable event. It will go into a rollover IRA, and then it is within your control. And you get to diversify and invest it in a way to give you the stream of income that you need. Now, that's a whole other story. So if you have decided to do that and you need to find out what streams of income you need and how to ladder that, we'll be happy to help you. Now, let's go ahead and go to what if I decide to turn on just lifetime income, single lifetime for me. That means, let's say I turn on single lifetime income, so Crystal will get her income for life, but if something happened to me, my husband will not receive anything. So it doesn't matter if something happened to me a year later or 2 years later. So that's one of the things that's really important to account for, especially if you're looking at your spouse and they're just as healthy as you are, they may be younger, and if you are the male spouse, if you're the husband, majority of the time, just statistically speaking, your wife is going to outlive you. So you really want to make sure that that income is there for her. Now, what's the best way? Is it better to do 100% survivorship, 75%? So it really depends on what other sources you have in place to replace that income should it be missing. There's been many formulas that I ran that it was better for one person to do 100% and for the other couple to actually do 75 or even 50. So it really depends on your situation. So if you're wondering which is the best way for me, again, this is the reason why it's best to keep it unique towards you and run some numbers. Now, let's go to period certain. Period certain means maybe I don't necessarily have a spouse, but if something happened to me, I want my kids to receive it. You cover it for a certain period. That's what period certain means. So for example, let's say it's a 10-year period certain. So maybe instead of getting $2,000 a month, which was your single lifetime, just as an example, you'll get maybe $1,900 a month, a little bit less. But it covers you for the first 10 years. So if something happened to you, let's say you turn it on at 65 and you collect your money, your monthly income, and then all of a sudden, 3 years later, something happens to you, the remaining 7 years is where your beneficiary will receive the income. So the only thing to be careful about, a lot of people think period certain starts after death. It does not. It starts from the moment you turn on your income. So again, you've worked really hard, you've been with Kaiser for a long time, and you have different plans in place. That includes possibly your 401k or your TSA. So whatever that is, it's important for all of the elements to work together to give you the best maximum income. So if you want us to run some numbers, go ahead and click at the screen below or give us a call, and we'll be happy to set something up to see what's the best way for you to maximize your retirement income.